Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Alright everyone, I'm back. Well, sort of at least. I've been away on paternity leave for the last week or so after my beautiful baby boy. My son was born to me on the 3rd of this month. It just gone 1:30 in the afternoon. It's absolutely perfect, bless him. And yeah, we've had a bit of a trying week. It's also the Easter holiday, so my daughter's home from school as well. And it's been absolutely wonderful looking after the little fella. But unfortunately, he wasn't putting on weight the way he should have been. So we've been back and forth to the hospital a few times since. But everything's now looking on the up. He's heading in the right direction, putting on weight again. And soon we'll be discharged from care and everything will be, you know, worry-free and back to normal. So I won't be back up to full capacity anytime soon. Obviously, like I said, it is still the Easter holiday, so I have still got my daughter at home to look after as well. But things will start to improve over the next few weeks, and I should get back up to my usual output within the next month or so here on YouTube. Now, for my patrons, I'd like to take the opportunity to thank you for your patience. I know I have pretty much abandoned you for the last week or so. I've been answering a few questions here and there, but from next week, I promise I will be fulfilling my pledges as usual. I will be getting my live stream done on a weekly basis so we can get back to the multitude of assets we cover during our live stream sessions. I will also be getting my weekly exclusive video out for my patrons as well, and just generally trying to get a bit more work done for you guys. So thanks again for your patience, and thank you very much for your support and all of your kind words as well, celebrating the birth of my son. So enough of that, now let's get on with what we want to do today. I want to look at Bitcoin and Ethereum today, and I think I'm going to start, I might go back and forth between the two, but I think I'm going to start on Ethereum because I think the count I want to propose as the primary, which I've already expressed as the primary in Bitcoin for several weeks now, I think it strengthens my case if I start here on Ethereum first, helps me explain it a little better, so that's what we're going to do. Okay then, so without any further ado, let's get going. Right then, so we're here on the day chart at the moment. Looking at Ethereum, this is the long-term count I've got for Ethereum. I know it's in very, very busy count. We're not really focused on that at the moment. What we're focused on is what's been going on ever since the highs back in May 21. We've got a few options here. Now, my preference, so let's just cut to the chase, is that we are in a triangle. Okay, it's just how I prefer to read it. There are alternatives, and we'll discuss those as well, bearish and bullish. But this is my primary count. Now, A, B, C, D now complete. Now, this could be a D that extends higher. This could be W, X, Y with another A, B, C in here to take us in a higher D wave. But I'm perfectly happy with this at the moment, to be absolutely honest with you. I think this has done enough. Now, we're in log scale, so let's just switch off and come and have a look in linear scale. Now, one of the complaints at the moment has been about how this D wave is very short. Now, it's all about perspective though, guys. Okay, so let me show you, and this will strengthen my case for Bitcoin later. So first of all, let's take the retracement. It's more than 50%, or it's pretty much 50% in linear scale, which is perfectly adequate in my opinion. Now, if we come into log, however, it's a perfect golden ratio. Right, so you've got, it's a 61.8% retracement to the tick. Right, to the tick. So I'm not going to complain about that. 61.8% D wave retracement in the triangle. A done. B was a running B, so this is a running triangle where B has expanded beyond where A began. C, D, and now E's to come. So we're expecting another free wave move down. So we should be getting impulsive price action to the downside, and it does appear at the moment that we are building some kind of impulsive move down, maybe something like this. So we're going to build up 5 waves. I know there's more than 5 here, but that's because I'm allowing for a subwave within the 3. Okay, and this E essentially has to come in prior to the C wave here, so it could be down here. All I'm doing with this lower line here is trend lines in a triangle. In Elliott wave triangles, trend lines tend to be very, very strong and tend to be pretty strictly obeyed once established. So essentially, if we're taking this lower trend line here and running up from this point to this point, then we could argue that we should find support around the trend line. Now, you could argue that if we bring this low into play here, it doesn't change it much, it just makes it slightly steeper, but I'd expect to find that trend line again at some point. So we're going to come down here. Now, E doesn't have to come to the trend line. I wouldn't expect it to go through it, or far through it at least, but it could stop prior to meeting it. Okay? And then we'd complete this triangle and we'd find a beat off in a fifth primary wave move higher, taking us to new highs. And considering the scale of the prior move up in the 3, the 1 and the 3, I would be expecting a pretty big blow off move in the 5th, would be my personal preference. Can't be certain of that, but we'll have to wait and see. So I'm leaning into this idea of a triangle for Ethereum. Okay, so we've established the 50% retracement for the D wave and 61.8% in log golden ratio. We like that, but can we find any more support for this idea of it being a triangle? Yeah. And I would argue that yes, we can. So what we're going to do is we're just going to turn off the cam for a minute. We're going to look at a couple of pitchforks that I've got. Right, so actually, I'm not going to start with that one. We're going to start with this one. Right, so I just want to point out how all I've done here is I've taken the A wave pivot that we're assuming, the B wave expansive pivot, and the prior high. This is our pivot for this original pitchfork. And what we notice is that the outer bound of the pitchfork has acted as resistance. Okay, so from the simplest, way of looking at things, rising lower trend line, outer bound of pitchfork off of a major pivot, acting as resistance, for a triangle. 61.8 again, maybe, and off we go. So I find that quite compelling as well, that we come straight back to the outer bound of this pitchfork and we found resistance. Now if we continue higher out of here, well, that unlocks the idea of it being a more bullish count. Also extends the idea of it possibly being a larger D wave, although there's no geometry that seems to support that. Let's just shift this into a shift pitchfork for a minute. I mean, maybe you've got play around here. Let's come into log for a minute. Since we were looking at the triangle in log, let's look at this piece of geometry in log. So golden zone support, golden zone resistance, 38.2 support, 23.6 resistance, median line, blah, yada yada yada. Same old story, it's bouncing between levels, right? Finishing at 23.6. Maybe this could be a WXY with another zigzag here to bring the D wave higher. Maybe we've got some kind of geometry here to support that. But generally, switching back into, or maybe the median line here. See, this is operated quite well in linear terms as well, but I think I just prefer the outer bound of this original pitchfork operating as resistance, with a 61.8% retracement in log and a 50% retracement in linear. So there's plenty of reason to have stopped here, is my point. It seems to fit the primary triangle idea pretty nicely. So the next thing to look at was this pitchfork. Now all I've done here is I'm just trying to pluck at some ideas as to where you might find your E wave. Right, so we've seen this rising trend line. Okay, we've seen that downward sloping trend line. We're now moving between levels here, 61.8, 61.8, 38.2. So maybe we're just going to come down to the median, back up in the B wave, back down to the median again. Alright, and get an ABC final zigzag for our E. We're higher than this pivot, and we're higher than the C wave pivot here, completed perfectly legal triangle. So that looks like a relatively legitimate place to find it as well. Right, so the next thing we should look at is the retracement of the A, the B, the C, the D. So we can look at the retracement of the D wave here. Alright, so let's just turn that off. Alright, so maybe come back to the 61.8 here of the D wave. Gonna get 5 down. Something like that, maybe deeper, maybe to 78.6. Okay, maybe you'll come down to the metered golden ratio first, back up in a B, then down in a C. Whatever. You take my point. Multiple areas of support and multiple forms of evidence from a geometry point of view to support it. Now let's just have a look at our moving averages. You can see how on the longer term here the 250 is operated as support. It then became resistance. We're back above it, then back below it. Both of these pivots here found support with nothing to do with these moving averages at all, so I would expect the same again. If we're coming back through here and we are going to find support, it will be on the basis of trend, okay, or geometry rather than the moving averages. So that would be all the evidence, I think, sufficient to support the idea that we're looking at a triangle. Alright, so now we've discussed that and we're happy with it. So now let's look at the alternate. The alternate is still alive and well, and it's a 3-wave move here, a 3-wave move here, and a 5-wave move with a very dodgy WXY in the 2, but it's legit. 3, 4, and a 5 down. Now we could have this as a WXY and this whole larger pattern as a WXY as we do in Bitcoin for a double combination, taking price lower, but we can get away with a flat. And even though we've got a bit of a funky impulse in the C, if we look at the overall structure, it is a flat. Okay, it works. Alright, it's just big sideways movement. Alright, so that's still on the cards as well. Cut-off point for this is 3975.55. That is the invalidation point for the wave 4 crossing back into wave 1 territory. Now, admittedly, the wave 1, 2, 3, 4 relationship is a little funky looking. Like I said, it's not a beautiful impulse. But, well, if you've operated in the crypto markets for any amount of time, you'll appreciate that the volatility in this market creates some pretty funky looking impulses. It also creates some pretty funky looking ABCs as well. I mean, in our group on the Discord, how many times, talking to you guys, have we come across extended Cs? Like, loads of the time. Like, they become... I'm just trying to be more flexible as I go forward with these assets, because generally they show extreme moves and extreme relationships. So it might not look like a classic nice impulse, something like that, right? With a steeper, shorter 2 and a longer 4, right? We get something, we get a more time consuming 4 here, that's pretty normal. Shorter 2, that's fine. Quite a deep 4 and quite a deep 2 as well. Not ideal, but alternation in form at least. We have a zigzag and we have a double combination up here. But yeah, it's not pretty, but it's still legit for the moment, and it gives us a route lower. So if this is the case, we've met resistance at the edge of that pitchfork, right? And now we're going to probably seek out the median line of that pitchfork to find our C. Down here, point of control, volume node, probably going to be somewhere near, my guess would be the 123.6. 123.6, 138.2, what are we looking at? Log. No, somewhere down here perhaps. Have I put that too high? I'm not high enough. No, I'd want to see it break the lows, to be absolutely honest with you, if it was coming down in a flat, because it would be an expanded flat. If it was a running flat, then it's already complete, right? It's already done. It's already here. This was A, B, C, very aggressive C, finishing very high, and off we go. But I can't really support a count down to here which helps move that, or a count which cleanly supports that move completing here. I'd rather it be a triangle at that point, to be honest. So that's my preference. If this is correct, we're going to come down lower. I would expect us to bottom probably just a little bit after the lows, because the whole point would be to break them, right? You break them just enough, that gets everyone short, everyone panics, you know, oh, the lows have gone, we're going to hell. That provides enormous liquidity for a bottom to come in. Okay. And trap all those shorters right at the lows. And I mean, it doesn't always happen that way, but it's quite common that when things break down through price support, people panic and sell, and that is often very close to being another low, because you're providing liquidity for the long side, for the trade. back up to the upside, right? So the exact same way as people getting trapped at the top when they're buying, right? They're buying into people's selling. People are selling here at the top, and the only way they can get out if there are buyers. The buyers are providing liquidity for the sellers to get out at the top. It's the exact same in reverse at the lows, right? The lows break, people panic, and the sellers provide liquidity once again for the buyers. It's just the opposite way around. Let's see. So anyway, enough chit chat about that. That's my alternate. 5 waves down, yet to complete. There's the invalidation point of 3975.55. My primary is that we're in a triangle, and it has been for a little while now, or quite a while now, and the only way this is going to break is if the C gets taken out here. So let's put in an invalidation point. Now, you could argue, because this move might not be complete for WXY in here, that we can't come back and touch this rising trend line, right? Because we can't have an A and a B which comes back and does that, but I'm assuming it's complete. So the only limit I'm going to put on this is that we can't come back and break that C. We can't come back with our E wave and go beyond this level here. It says 2160, so let's just make this precise. Okay, 2160. D, if it's done, E cannot come back beyond here. I'd expect to find it along the trend line, right? Trend lines in triangles are very well respected in Elliott wave. They break occasionally, but very rarely by any significant margin. Normally they are very well respected. They tend to team up with Fibonacci retracements and some form of larger geometry. Now, we've seen with our pitchforks where the resistance is to the upside, right? Finding it on the downside here, I think this rising trend is probably the best candidate overall. Okay, so there's my 2 counts for Ethereum. Looking to see the E wave come in, and we're looking to see it come in the form of a zigzag, right? Because we're expecting another ABC to complete this triangle. Okay, so let's leave Ethereum there, then we'll come over and spend some time looking at Bitcoin now. Is there anything else I want to look at before I go? Let's just bring up our moving out. Let's bring up our RSI and our MACD. So day time frame. What I'm really looking for here is we've had this subdued period during this correction. We had our trending in the overbought territory here, multiple readings in overbought, not going through oversold at any point, staying above it. Once we've come into the corrective territory, we've peaked on those below and gone into oversold territory a couple of times, and we have been reluctant really to push significantly above the 70. Now, we've had this early push here, we've done nothing since apart from come down into oversold conditions, and now we've had this push back up into here. So really what I'd like to see here now is if we're coming back down into a D, I do not want to see a return into deeply oversold conditions like we saw here. I want to see the RSI come down, not get into oversold territory, and then trend back into bullish territory again. Right, that would be the completion of the E. Then we get an impulse out, then a pullback, then we start to fly. And from that point, I'd expect to see some kind of RSI behavior like that, getting back up into these bullish swings where we stay above oversold and we keep trending into the overbought territory. So what I'm looking to see over the longer term, similar activity in the MACD, depending on where we are, whether or not we pip the strength we got here, the momentum we got in our wave 3, is still a significant move would be required to get us up there. But I honestly feel, looking at it, I think we would. I think we probably get an extension here in the 5th coming out of this 4th wave triangle. We could probably have quite an explosive move. That can be misleading. Triangles can lead to just a small little pop in the 5th, or they can be the beginning of something huge. So great, it could go either way. But if it completes bullishly, it's definitely going to new highs. We can say that at least. How it starts to break down once it completes, in terms of subdivision, we'll have to wait and see. Alright then, so that's Ethereum. So let's move on to Bitcoin. Right then. So let's start in linear. Let's bring up our primary count. So here's the primary count. Now this is why I wanted to start with Ethereum first, because I can hear people say, I can hear people complaining about the size of their D and getting quite, insecure and annoyed about it. But there's nothing you can do about it, guys. If that's the size of it, that's the size of it, and if that's our D, that's the D. All right. So people say it's too short. I say, tough. It's come to where it's come to. If we switch into log, it doesn't look that bad. Everything looks better in log scale. Now, if we come down from that pivot, we get a 50%. 50% swing back. That's good enough. Okay? It brings us right back into all of this shit back here. Right? All of this resistance. All of these previous support, resistance, pivots, all of this junk. It brings us right back into the middle of it. An obvious place to find resistance. Okay? 50% retracement. Also, if we bring up, where are you? Our pitchfork. Let's turn off the primary count. Look at what we've done. It's the exact same gig as in Ethereum. Okay, off of this swing low, swing high pivot, we've come back. Excuse me. We've come back to the outer bound of the pitchfork, exactly as we have done in Ethereum. Ethereum got a 61.8% retracement in log. We get a 50% here. It's not an impressive move up, admittedly, but I think dismissing it purely on the basis of length would be unfairly biased. So I think that's that's absolutely fine if there are Elliottians out there who are saying, oh no, it can't be a D, it's not sufficient. It's like, well, looking at the way the geometry is playing out, support and resistance at various levels and retracements, I think it is sufficient. So agree to disagree. I think we may have done enough here. Now it could go further, as we discussed, so let's just bring up the count again. And let's come into the nitty gritty for a minute, right? So I've got this as an A, B wave triangle, C zigzag, A, B, C. I can get 5 waves in here, and we come down to a smaller time frame, no problem. Coming down from here, it looks like a 1 and a 2, and then we're extending in a 1, 2, 3, 4, 5, 3, 4, 5 would be my guess. So let's just throw on. This would be, that's intermediate, so into minor that would have to be minute. This would have to be minuet. Is that right? No, it's intermediate. Sorry, I was just talking. Oh, bollocks. So let's change that into minute. So if we get 5 to here, there's a A. Right, we go la-di-da-di-da, B, and then come down in a C. Heading back probably for this trend line. Okay, rising trend. Bum, bum, bum. Same as in Ethereum. Okay, so I see no reason why we wouldn't come back and do that. Now I don't know how deep this B is going to be. It could come all the way up to like 50% would be pretty normal. 61.8% would be perfectly normal. 78.6%, whatever. Could be shallower, could be deeper. Could be another triangle. Who knows? But either way, I'd expect it to complete within this trend line. Right. As I've said previously, Elliott wave triangles, if it is a triangle, are very respectful of trend lines. So there you go. That's why I wanted to cover Ethereum first, because I know that if I shown this idea in Bitcoin, the immediate revulsion around the size of that D wave in the triangle would have been, oh, it can't be right, it's too small. Well, I put forward a pretty solid case of it in Ethereum, and price action is expansive in the B and rising on the lower trend and basically doing the same bloody stuff. So if it's doing the same stuff and it's legit in A, in one count, why can't it be legit in the other? It seems to make sense to me that if they're doing the same thing, then they're doing the same thing. Exactly. So, but anyway, that's how I see it. I'm thinking that D's probably done. Now, maybe you could say 3 into W, triangle into X, and then another 3-wave swing into Y. That would be the only way I could see this extending higher. So this would still be 5. This would have to subdivide as 3. And then we get another 5-wave move for an A, B, C in a Y. Now the problem we have with that is we've already put our complex wave in the A. Now we haven't had to do that in Ethereum. We got an ABC in Ethereum. Right, subdivides. Can't get it here. Not without a really ugly look. So we've used up our freebie. Right, one complex wave in a triangle. It should appear in the C, the D or the E. It can appear anywhere else. It's just less likely. It's rarer. It's not impossible. It's just rarer. So we've had a rarer complex wave in a triangle appearing earlier in the triangle than later, where we would expect it to normally be. So that's fine, but we can't then use up a WXY here, because then we've got 2 complex waves. So we'd either have to force that awful looking zigzag into here, or we'd have to live with this as a completed D. Now, given the support for the argument, for the idea in Ethereum, I'm happy to call that a completed move. So this should now come down in 5, up in 3, down in 5, pushing us out probably into May, mid to late May. Depends. Could that be ABC E done? And now we rip out of here. And it was just a teeny tiny E. Yeah, that's possible too. Can you subdivide it that way? Oh, you go and worry about that. I'm just trying. We've been going sideways for so long, I'm just waiting for it to break this sideways action and to complete a larger pattern. That's really what I'm interested in. You know, so I think I can get 5 down here, so I would expect to see ABC. Okay then. Yeah, so that's the primary count of Bitcoin. The idea of a completed triangle. Probably not a very popular one out there at the moment, but it is what it is. Like I said, I've provided some evidence for it. So let's look at the alternate. Okay, now this has got some legs too. Right, there's no denying it. This was my primary. You know, not forever ago. Bear with me, my brain's just stopped functioning. Lack of sleep will do that, guys. I have had... I mean, it's getting better, but I haven't had that much sleep lately. Okay, so that's all I'm looking for. I'm just trying to remind myself of what I'm saying at the top here. Flat into a double zigzag. I've had so many people, well, not so many people, I've had quite a few people in the YouTube comment section and elsewhere complain about this being a double zigzag, but the way I see it, as I've expressed, go and read it in the Elliott wave principle. Zigzags, double zigzags, triple zigzags all come under the heading zigzags, so I think it's interchangeable in this situation as part of a combination W, X, Y with a double zigzag in the Y, WXY. So now the only reason I prefer that is this looks more like 3 to me than 5. Okay, if you can count it as 5, fine. If you can get it as a simple ABC for a completed running flat in a bullish count, fine. I'm not going to argue either way, but ABC into W, ABC into X. Now we already can see that we've got 1, 2, 3, 4, 5 in here. Dodgy, I know. ABC, 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 so on and so forth for a B wave triangle, and then we've got our 1, 2, 3, 4, 5, or wherever we add it in here. Right, we counted it for the primary count. Okay, same subwave structure, but it's an X wave. This will now come down in 5, 3, 5. Break the previous lows, get everyone short, get everyone panicked, and then bottom shortly after off of the back of all those sellers, and off we go higher. That's what I would expect. Okay, and then this whole thing completes. Now, admittedly, the relationship inside of this correction is pretty neat, pretty tidy. Right, we've got a 1-to-1 relationship. Now you might say, well, why haven't you taken it from the E wave here? I'm not convinced this isn't a WXY. Okay, so what I mean is within an X wave. So this was the 3-wave correction, and this was another 3-wave correction within it. You see what I'm saying? So I'm taking the pivot from here, and that gives us a 1-to-1. But even if we ignore the 1-to-1 and we just take the A, B, C, D, E, B completion of the E of the triangle here, we still get, we still get a perfect channel, corrective channel. Bomb, bomb, bomb. Right. So that looks pretty compelling as well. And that is my alternate. So what we're looking for here, guys, is the long-term target, multi-invalidation target, breaking. 3, 2, and let me get this right. 32950 spot 72. That's supposed to be. Alright, that. Okay, so that level breaks, and that alternate counts the correct count because the bullish one's wrong. The triangle's wrong if that low breaks. Okay, so that would be W, X, Y. I don't think it has to be a big second zigzag. I really don't. I think a small second zigzag just to get price lower. That's the function of it. Just to get price lower than the previous lows would be all we need. As I mentioned earlier, the relationship in these three-wave swings can be pretty extreme in terms of extensions in A's, extensions in C's. We always look for zigzags to tend towards parity. Okay, A and C being equal. That's the most common outcome, but it is by far not the only one. All right, extended A's happen, extended C's happen more here in crypto. Like I said on the Discord, we've been discussing it and we've seen it frequently lately. There's my preference. As unpopular as it might be at the moment with that short and D wave, I feel the argument of the exact same occurring in Ethereum, and if I keep drawing on my own chart, I'm going to lose my mind here in a minute. There we go. I feel that's pretty strong. Right. Alternate count is a WXY. It's a broader combination. Okay, and it will take price below this 32950 spot 72 level. And then finally, we've got what else we got here? Getting off of the low in a bullish fashion. Is it even possible anymore? Honestly, I'm not sure if it is. Let's just bring up the strongest example of bullishness we have. Okay, so this is what I call the NZ special. Alright, and if people figure out what I'm saying by saying that, I don't want you to think that I'm in any way being disrespectful. The source of this count, from my personal opinion, is from a highly respected source that I have a great deal of time for, but I'm not going to name names. This is not my count, and I don't want to get into the business of poo-pooing or agreeing other ideas. But the reason I want to discuss this is because a lot of people on our own Discord have discussed it, and it's an idea that I honestly feel, until it's dead, it's legitimate. And this idea of just a absolutely gigantic extension of nesting structures in a wave 3. 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2. Now the only way we're going to be able to get this to work again is we've got a shortened C here, truncated C. Okay, fine. And I'm going to have to say at that point 1, 2 again, and just keep adding extensions to this until it finally breaks down. Not saying it's going to, but I don't have particular faith in it being this being the correct interpretation, purely because I prefer my own. I mean, that's okay, isn't it? Yeah, but this would be the most bullish interpretation I've come across. 1, 2, 1, 2, 1, 2. I'm not sure about this bit 1, 2, or this bit 1, 2. Then finally into a series of 3, 4, 3, 4, 3, 4, 3, 4, 3, 4, 3, 4, 3, 4, 3, 4, 5. So we get all the way up to the moon. Now, and that's it. That's all I've really got to say about that one. It's uber bullish. If I was going to put my own bullish spin on things, in terms of it being impulsive, then let me show you what I would do. My bullish alternate still works on the premise of this being 3 into 4. A, B, C flat, A, B, C zigzag, not part of the combinations, just a connective zigzag. A, B, C, Y. Flat into a zigzag. Right. Double combination into 4, starting a fifth wave extension. My bias towards fifth waves being extreme from a historical point of view in crypto, I think you don't have to agree with it, but I think you have to some degree give it some leeway. You have to respect it, because these blow off moves seem to be the natural conclusion to a bull market. The natural conclusion to a larger bullish move is in a blow off top. It's just the way this particular market seems to function. You know, it's not uncommon in any market. People get highly exuberant near the highs, right? But extensions in threes are the most common because they're based on the idea of the greatest level of market participation. Right? You've got maximum amount of investment from institutions, but you also have retail waking up and piling in. Fifth wave in traditional markets like equities markets tend to be mainly the subject of retail speculation. However, that retail speculation is way more extreme in the crypto markets. It would appear to be in those final moves, that final move higher, and therefore the blow off top seems more likely, in my opinion. But I feel like I'm waffling in a minute. Let's just get out of here in another 1 and a 2. Then. So I'm using the same idea. 1, 2, bum, bum, bum. The only difference is the way I counted the larger structure. So it would be 3 for me at primary degree, so not 1, 2, 1, 2, 1, 2, 1, 2 for days. 3 into 4 up into 5th, which I reckon is going to be extended. Okay, with the way we're going 1, 2, 1, 2, 1, 2 here, that would be that would explain it. An extended 3 within the 5th, which I think itself is going to push on to much higher targets if this bullish count is correct. So let's throw that into there. Alright then, so before we wrap things up, let's take a look at our long-term pitchfork. No, that's a short-term one, Tom. Right, now, what I find interesting here, let's turn off that light, and I pointed this out before, my preference has always been for this to be 1, and this to be 2, and this to be 3, and this to be 4. Right, and that's a nice relationship. Alternation in waveform, with this being our running triangle. Okay, I like that, and it's been my primary for the longest time, and I think it's going to stay. Now, I have had the running flat in here as a previous primary, which is why I've kept it as the alternate bullish count. I did that off the back of all of this confluence we saw that supported this low. But the one thing you've seen here recently is the play between the 61.8% level and the 38.2. So, 23. Let's just see how the 23.6 here is operated as support. Come down to the 38.2 support, down to the 61.8, back to the 38.2 resistance, back to the 61.8 support, back support, back support. Broken it. Now we've broken it before, right? And come back above it, but they were wicks rather than bodies. Okay, so you can see wick through it, didn't body below it, bodied below it and back tested it. That looks kind of bearish, right? Now it could just be part of a way down, right? 3 into 4 into 5, then the B, then the C. As long as we come in before here, it's all gravy. Right, so maybe we're just seeking out a lower level. Maybe we're seeking out the 78.6. Okay, now if we are in the alternate count, the most obvious place would be the edge of the pitchfork. Right, that would bring us to all these lows here. Now imagine if those lows broke and this pitchfork broke. Right, that would be enough, I think, to get everyone and their cat short. And that would be a good that would actually be an opportunity, a possibility of this thing turning around. Now, it's going to cause issues if that happens, but I think that's a bridge we'll have to cross when we come to it, okay? Because for the moment, stick with your primary count until it gets invalidated. We've got an alternate to explain how we go lower. How much lower is literally anyone's guess. It could be a pathetic little zigzag. It could be a huge move, right? Because there's always the possibility that we've topped out. So that's the last thing I want to touch on. So let's just hide this. So I have one more count here to deal with, which is the cycle wave top. This was still 3 into 4, but it was short. Very short, flat pattern. 1, 2, 3, 4, 5. Okay. Or if you want to, 1, 2, 3, 4, 5. It doesn't matter how you get up there. This is the completed top. 5 waves up. Now, my gut tells me that if that's the case, all of this has to be downgraded. Okay. That's not primary into cycle. Right. Because there's no... there's just no way that that was primary wave degree. Right, what we're talking about. Talking about 121 days. No, I'm not buying that. So that would get downgraded into intermediate. This would become intermediate wave 5, and this would become a primary cycle top. Okay, so primary top rather than cycle top. And then at that point, this whole thing is a larger correction. W, X, Y. Now at that point, we can talk about significantly lower lows. Right, so this is a backup to my alternate count for the wave 4. This pushes us lower, assuming the 4 and the 5 were completed, into a larger correction at a larger wave degree. And that's there to back us up in case these break down. Now, this is still my primary. For as long as this upward trend line holds, and we get an ABC in here, I prefer this. We are in a triangle, I think. Okay, and once it completes, we will march on higher. And we have our bullish alternates here and our extremely bullish count here. So I know there's a lot of counts I'm talking about here, guys, but I really just want to get it down to, let's bring it all the way back up here. Delete these brush strokes. Primary and alternate. These are my 2 counts. Triangle, double zigzag lower. That's it. Everything else is open to conjecture. We've got that logarithmic target here, right, for our 50% retracement. Arithmetic targets, if we were going to go higher, are here, if that D wave were to continue. But I think it's over. I think we've done enough. It might not look like enough, but I think we've done enough. Alright then, guys, I don't think there's anything else to talk about here. Let's just have a quick look at our MACD and our RSI. Same kind of gig again. Same kind of deal again. We want to get back into this bullish trending behavior. We might touch the oversold conditions, but then we don't want to really come back into them. We want to stay in a strong bullish phase, popping above the 70%. What am I talking about? The 70 RSI reading, right? We've just done it here, but we're not into bullish mode yet. We've come back to oversold, but not deeply into it. I wouldn't want to come back lower than that previous low, or this one, really. I don't want to see that kind of bearish move again. Well, let's clarify. The completion of the E into oversold, I can live with. I can live with it. I'd rather see us start the trend higher, but we've still got to complete this correction, so maybe. Now the MACD is rising the whole time. Okay? So, once we get this triangle and we break out in an impulse, I would expect to see that behavior again. Yeah, coming down to oversold, but generally trending and staying in that bullish region in the RSI would be what I'd expect to see. Okay, our moving average is here, 60 to 50, back below both of them. Just coiling up again, aren't they? That's quite typical of a triangle. You know, let's see how they look if we put the 10 and the 20 on. The swings become less, the moving averages become closer and coil up over time. Volume still flat, going sideways, typical of a triangle. Point of control is Well, it depends how much visual data you've got, doesn't it? All the way down here, shorten the visual data. Up here, bring in some of the previous data. Depends. Either way, big ass node of volume here. Plenty of room to get that E wave in. Right. In fact, when you look at this whole volume here, and there's still further support for a triangle in my mind, all that trading done inside of that one range. Anyway, we'll leave it there, guys. Thank you very much for joining me on this update of Bitcoin and Ethereum. If I've missed anything and that you wanted me to talk about, please give me a break. My brain's a bit jelly-like at the moment, so I'm just trying to get back into the rhythm of things after a break. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, big thank you to my patrons. Your support is massively appreciated, especially during recent times. If you're interested in joining the Patreon, please follow the link in the description below. Have a read of the various tiers. See if anything takes your fancy. Feel free to sign up. I currently have a series of playlists that you can watch if you sign up, which are available on the Discord, also on the Patreon, which can teach you Elliott Wave from scratch. I mean, that seems to be one of the things which attracts people in the most, which is just an opportunity to learn Elliott Wave for $10 a month, you know, and then you get all the other benefits on top. But enough of that. Take care of yourselves, guys. I'll be back with you as soon as I can. All the best. Bye bye.